QuickBooks Pro Desktop 2021. How accounts are sorted without account numbers. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our sample file. We currently have the open windows open. You could open the open windows by going to the View dropdown, selecting the open windows list. We now want to take a look at the chart of accounts to see what the order would be without the account numbers so that we can then think about what kind of factors or control the account numbers will have over and what it will not have control over. So we're going to go to the lists dropdown. Let's take a look at the chart of accounts. The chart of accounts, we're also going to be changing or turning off the account numbers to start with to see where the default is without the account numbers. By going to the edit dropdown, let's take a look at the preferences and the accounting and then the company preferences. We're going to remove the account numbers to start off with. And so there we have our chart of accounts without the account numbers. Let's open up our major financial statements, balance sheet, income statement, and also take a look at the trial balance. Let's go to the reports dropdown, company and financial, take a look at the balance sheet standard. Going to change the dates. I like to do it up top here from, I'm going to say 01/01/25 to 12/31/25. I have 28 over here. Trying to do 25, 01/01/25. All right, and then we're going to say okay. Let's open up the profit and loss. Notice there's no account numbers here, of course, as we turn them off. And we'll go to the reports dropdown, company and financial, profit and loss, same date range, 01/01/20 to 01/01/25 to 12/31/25. Then let's open up the trial balance as well. Reports dropdown, and then accounting and taxes, and then the trial balance. Same range, 01/01/25 to 12/31/25. There's the TB, the trial balance. Now, when we think about the chart of accounts, the account types are the things that are going to be driving the ordering of the accounts. And this will be true, I'm going back to the chart of accounts here. This will be true whether or not you have the account numbers on or off in general. Now, you can sort the chart of accounts over here by account name, but that's not really how you want to think of it, because when you add a new account, you want to put it into the right account grouping, whether you have the accounts on or not. So you really want to sort it basically by the account type over here, unless you're doing a specific search in some way, shape, or form. Now, when you think about these account types, they can look kind of overwhelming as well when you just look at them in this long list. So you might start wanting to group in your mind how this thing is going to be looking. So you can kind of break this down into components. So if I look at the balance sheet, for example, if I was to break the balance sheet down into its smallest parts, I'm gonna minimize the balance sheet into its smallest parts here, hitting all these triangles, and I'm going to take the inside out. So I'm hitting the inside triangles first and then the outside triangles, so that we can minimize these items. So equity, and there we have it. We have the balance sheet down to its smallest, basically, component, and this is the accounting equation. So this is important because this is basically the ordering of the chart of accounts. It's going to follow the accounting equation. So if you look at assets equal liabilities and equity, assets then liabilities then equity. That's going to be your chart of accounts. In essence, assets, liabilities, and then equity. So then if we go back to the balance sheet, we'll get into the detail of the subcategories within there. But just realize if I go into equity here, or liabilities and equity, we got the two categories, liabilities and equity. If we open up the equity section, you'll see that part of equity is net income. That's because the balance sheet is as of a point in time, and the net income tells the story of how we got to that point in time. So the whole income statement you can think of in terms of the balance sheet as basically part of the equity section. So that means if we take into consideration the income accounts, they're basically part of equity. That's why the chart of accounts is going to be in order in terms of the accounting equation or balance sheet, assets, liabilities, and equity, on top of the income statement accounts or P&L accounts, which if I go to the P&L and I do the same thing and I minimize all the accounts, we'll get down to, in essence, expenses and income and expense. Let's just minimize this whole thing here, and we basically have income and expense type of accounts. So it's going to be balance sheet and then the income statement. So the first way you want to think about the order of the chart of accounts, balance sheet on top of the income statement, or the account, well, first way, the accounting equation, assets, liabilities, and equities. Then you expand it, expanding equity to include the profit and loss, because the profit and loss is in essence part of the equity section. So now you got the balance sheet on top of the income statement. Those accounts include assets, liabilities, equity, and then income and expense type of accounts. And then we can break into more detail of these categorizations. So then you can start to expand on that and say, okay, well, if I add in on the asset side, I also have current assets. So current assets is a subcategory on the balance sheet. It's not actually something that's a type yet. It's not an account type, but it's on the balance sheet because we need sub-account types within there. So we don't have just current assets. We have the checking accounts. Now this is an account type. This is a bank account. So all of these items driven by these sections, these are bank account types that align to the top part of the chart of account here. So these bank accounts are in that little triangle that are up top. We have to break those out. QuickBooks breaks them out and doesn't do as you would expect on just normal financial accounting, just grouping the cash in to the chart of accounts, because it needs to have special needs for those account types. The checking account might link to a bank, and therefore it needs its own account type. So it's going to be in its own account type there. And it's in order by liquidity, cash being the most liquid. And then we got the receivables account type. This little drop down is an account type. So if I go to the chart of accounts, they broke out receivables into a separate account type. Why? Because receivable has special needs. In normal financial accounting, it would just be another current assets. But because you have to track the customers with it, it has special needs and therefore a special location on in its own category for QuickBooks. And then we have other current assets. And this was what you would expect all current assets to be, all in one category, except that the special needs within QuickBooks for checking and accounts receivable broke them out. So if it doesn't have any special need and it's a current asset, then it's just simply going to be grouped into the current assets. That's going to be the next account setting that we have here, current assets. So going back to the balance sheet, then we have the fixed assets. These could be called depreciable assets. These are account types now. Buildings in here, land and whatnot, those long-lived type of assets. Property, plant, and equipment, PP&E, other names for them. Those are going to be a specific account type because they have special needs. They're going to be down here, and those are typically broken out in financial accounting as well. Then the next categorization is going to be the other assets. These are going to be long-term type of assets, things on the books that we expect it to be over a year or so. And so, again, those have a separate categorization because we want to break them out in that order. So you can see we need them to be broken out in this order on the balance sheet. That's the order that they need to be in on the balance sheet. So the account numbers can't change that really because that would be funny. That would be weird. So that's going to be that. And then we have the liabilities. On the liability side, let's close up the equity for now. Liabilities, we have the current liabilities, and then we have the accounts payable. So same kind of thing. Within current liabilities, which would be the subcategory in financial accounting, we have another subcategory of accounts payable. Why? Because accounts payable has special needs. It needs to be tied to the vendors. So the accounts payable down here, it has its own type, account type for QuickBooks, even though it would be just under current liabilities in financial accounting. Credit card, same kind of thing. It has its own little account type within current liabilities because you could connect the credit card to the bank. So you have similar needs to like the checking account needs, and therefore in the chart of accounts, it's going to have its own account type for credit cards. And then we've got the all other liabilities. So if there are no other special needs, then it's going to go into other liabilities. Now they have another little drop down here, which is for payroll liabilities. This is not an account type. This is a subcategory. So that gives us also, you can see some more control. Notice we have this item under other current liabilities, and you might want all these kind of together. And the way to put them together is one, you can use account numbers that are all in order, or two, you can use subcategorization. So this is another way to get more control over the order of the accounts on the chart of accounts without using account numbers. We can use account numbers with this method, but notice whatever the account numbers we use underneath here, they're all going to be subcategorized under the parent account. And the way you do that is if we right click on here and edit, we're going to say that it's a subcategory. So we made this little subcategory and a subcategory of another account, that being payroll liability. So they're going to be categorized within here. So that gives us some more control. It's another way, similar kind of grouping or control method that we can use with account numbers, where it has a similar effect to control the order of the account numbers. So this little triangle here, not all triangles are going to be subcategories. This triangle is going to be related to the subcategory. I mean, not all the triangles are going to be account types, as we've been looking at. Some will be subcategories. Okay, so then we're going to go down to the long-term liabilities. These are going to be those that are due over a year. So over like long-term loans that are going to be due, we have to pay over a year. So that's normal financial accounting and stuff too as well. We break out the long-term. That's another account type. And then we have the equity accounts. Equity accounts would include like the capital account. It could be called equity if it's a sole proprietor. It might be called capital. If it's a partnership, you'd have multiple capital accounts, multiple equity accounts down here for the different partners. If it's a company, you're going to have the retained earnings. Retained earnings is the account it rolls into. But in essence, these are all equity accounts. Then under that, and that's going to line up, of course, to the chart of accounts here. So chart of accounts, equity accounts. Then we have the income statement, which basically is just income and expense. But then we could have some more subcategorization on the income statement. So we actually have less account types on the income statement, although we typically have more accounts due to the fact that the expenses are often quite large. So then we have the income statement or profit and loss next in line on the chart of accounts. Those typically start with income, which in financial accounting often called revenue. You can call it revenue or income type of accounts, the top line of the income statement. And notice then, so that lines up to our chart of accounts here for the income statement accounts. Then they did the subcategorizations again. They wanted more control over the type of income account. So this little drop down is not driven by the account type, but rather by the subcategorization. So they were able to exercise more control in the ordering of the accounts, not by adding account numbers, but rather by using the subcategories. So we see these subcategories under here as well. So no matter what, the accounts are underneath, they're income accounts, so they're going to line up underneath. They have to be income accounts in order to be in a subcategory of an income item. But they'll be next to this item no matter what, because they're in there. Within this category, they're then ordered in alphabetical order, which then we don't have as much control over the alphabetical order within the subcategorization. So then we have that subcategories on the income accounts. We have the same down here. These are still income accounts. Cost of goods sold is a special type of expense account. Therefore, QuickBooks breaks it out in its own category. It also might be linked to things like a perpetual inventory system tracking the use of the inventory. Therefore, it has special needs. Therefore, it has a special account type. So these are cost of goods sold, basically special expense accounts. Then everything else under that is, well, not everything, but most everything from that point is expenses. That's usually the largest category. And notice under the expenses, we're going to have more subcategorization. So that's down here. I'm going to open up the expenses. So we have a whole lot down here. So now we have the automobiles, insurance, and repairs. And notice these are all grouped into the subcategory, and then the actual items into the subcategory. So once again, they're using a system other than account numbers, which you can use whether you have account numbers or not, to exercise more control and give more detail and allow us to basically collapse these items or expand them depending on the needs of the user, the financials. So if I go into the chart of accounts, then you can see the expense subcategories that are broken out down here. And then once again, whether we use account numbers or not, that's one way to exercise some control, to have the accounts that you want to be next to each other, or in a grouping at least, to be in that particular grouping. So then we have those items. Those are all expenses. That's usually, once again, the largest category, and that's where account numbers can be really helpful, because within this subcategory we might want to have another ordering as well, or we might want to order with less subcategories and use the account numbers to have a similar effect. So then down below we've got the other income and expenses. These are items that we might want to have not on, like if I had income that wasn't part of my normal business, I might want them down here, down below. So instead of doing that, we're not going to do that with account numbers. We're going to do that once again with the type of account. So in the chart of accounts, then we have down below here, other income and expenses. So that's going to be the normal category. You're categorizing by type. And as you use the account numbers or not account numbers, you want to basically kind of visualize what the account types will be. So when you make a new account, you know where it's going to be, both in terms of the chart account as well as where it will line up on the balance sheet and the income statement. And if you start just thinking about it as balance sheet on top of the income statement, balance sheet being assets, liabilities, equity, income statement being income and expense, then that's the starting point that you can then go from and expand out into these other types of accounts that would be necessary within that subcategorization. So after we have this kind of understanding down, next time we'll start to think about, well, how can we use account numbers to give us some further control? It's going to have to give us further control, in essence, within the subcategorizations within the account types.